everybody. I want you all to on your camera because we need to record that you are attending the meeting. Could you all please on your camera? Okay, there is Zailani. No, do not off it. Just keep your camera on. Angeline. Yes, some more, please. Who else have not on their camera? Please on your camera. Rosemary, please. I cannot see. It's all dark, Rosemary. Komati. Kasinadan. Raymond. Shahat. Puspavali. Para Manat. Please on your camera because we need to record. This is the proof of your attendance. I want to remind you, you need to have at least 80% attendance before you can allow to sit for your final exam. Okay? Before you can sit for your final exam. Yeah?
So is it okay if we off the camera because some of us are working? So it's not possible for us.
Yeah, just give me a few minutes. Let me do okay, just hang on. Okay, just let me do the what they call that one. Show participant. Okay, I will download the let me do the downloading of the attendance first. Okay, download attendance list. Okay, the file is downloaded. So thank you very much. You can off your phone now, please. If you want, you can off your phone camera, off your phone camera. Okay. First and foremost, I want to show you something. Oh, hang on. Just a moment. Okay, can you see this PowerPoint slide?
Yes, sir.
Okay. This will be shared with you later on. I think still got some students coming in, huh? Anybody else not? Coming in? Okay. So this will be shared to you later on in the WhatsApp group. Basically, we will do from 3 to 6. Today is Friday. We cannot do it tomorrow because tomorrow is a public holiday. And then you have 2 more classes, 14 and 28. That means next Saturday. Okay, altogether 3 classes. This is the hyperlink. Maybe did you all enter using this link? I'm not too sure. Okay, but you can enter again next week with the link that you have right now. Okay, now in this course, how many of you are actually first time attending our classes here in Lincoln? Anybody first time?
Me, sir.
So there are some people who are first time attending classes. Anyway, what we have here is we have 3 types of coursework. Now the wording here is coursework. That means you have to do it within the course itself. Okay, and you have to do one written assignment, one presentation, one case study. Okay, so I will explain to you one by one. Okay, and the deadline is 2 weeks from now. Okay, deadline is 2 weeks from now. So let's look at the what is required for you for this written assignment. Again, all this will be shared later on in the WhatsApp group. Let me talk to you first. Business accounting and finance. Where's healthcare? Oh, hang on, I teach a lot of subject. I'm sorry. Okay, where is my ODL? This is ODL, huh? Okay, business accounting and finance is MBA. Yours is healthcare one, huh? So healthcare is a little bit different. Just wait. Master of Healthcare. Okay. No, not this one. I'm sorry because I just came back from another class, so I'm not
It's
set up
okay, sir.
nicely.
Take your time.
Yeah. MBA and Healthcare Austria. Must be in the other file. Are you ODL or not ODL? Huh? You are not ODL, isn't it? You just happen to be, okay, now mind. Okay, these are the subjects that we will be teaching you. Okay, and I will show you the coursework. Hang on. Okay, we will start with the assignment first. Oh, the assignment is this is a Word file, okay, and we have 3 current subjects: issues, impact of environment, social and governance, digital transformation of accounting, and conceptual or practical challenges. Okay, so you got 3 questions. You are required to select only one of the above, and you should write, okay, in Word, a report of 2,000 words. So I don't expect you to write 3, just write 1. Okay, you select 1. Okay, now where you will get your data from, you can go for the internet or something just to get the data. And you're using words to type 2,000 words. I want it to be in Times New Roman, font size 12, margin 1 inch all around. You need to perform a spelling and grammar check. You know, under review here, we have a spelling and grammar check. Okay, and this is the first sheet, so you need to put in. So what happened is this is a Word file. So what I want you to do is to type your answer in the next page. Okay, so if you are selecting question 1 or 2 or whatever it is, so question 2 answer. Okay, then you start to type in here, and then you save your file. So far clear? Say something.
Yes. Yes, sir. Yes,
Yes,
sir.
sir.
Okay,
Yes, sir.
now let's continue. So this is the assignment. Okay, this is the assignment, and it carries I think it's 30 marks. Okay, and how are you going to put your assignment? So you can put your assignment, the file name, maybe Ali assignment or Chan or Kuma. Okay, put your name and your course type. So these are 3 course type: assignment, presentation, case study. And then you need, well, why you need to put in this name is because I have 100 students. And every one of them is sending to me assignment, presentation, case study. So when I open your email, I have a problem. I don't know who is who, and then I must open one by one. So what I do is I want you to put your assignment under this file name. Please follow your name. No need to give me your full name. A short name will be okay, right? Because in your assignment here, you're supposed to put in your student name and your student ID. Okay, you type here. Okay, you type here. Now, assignment, you can have 4 person doing it. You can do it by yourself. No problem. 2 person, no problem. 3 person, no problem. 4 person, no problem. A joint one. Or you can not, you can do as an individual, but not more than that. Okay, not more than. Anybody still waiting? Kavita, Yogeswari. Anybody? Oh, still coming one by one. Huh? Okay, so when you submit, if you are 4 person, the first name, put his name, and the first person submit. No need to have 4 person submit the same thing to me. Okay, and where do you submit to? You submit to this drive. Okay, so let's open this drive. This is a Google Drive. Okay, so the Google Drive, the name is business accounting. Wait until you come out. Today is a bit slow. I don't know why the line. Okay, ODL MBA in healthcare, right? So you just okay, as per normal. So upload your file, right? So far, okay?
Yes, sir.
Okay,
Yes.
sir.
Okay.
Here, okay. So that is the assignment. Select one. Where you get the answer from, go to the internet and find. Go on books to find. Anywhere. Okay. So when I'm saying 2,000 words, I expect around there, 1,008 to 2,002. Don't give me 20,000. Don't give me 500. Okay. Just select one. Okay. Then you type in and send it. Okay. You should write like this. Abstract. You write abstract later, a summary, introduction to your topic, any literature review on this particular topic, finding, discussion, conclusion, within 2,000 words. So it's all short paragraph, short paragraph, that's all. Okay? So far, are you following me?
Yes,
Yes.
sir.
Yes, sir. Yes, sir.
Okay.
Yes, sir.
Now, hang on. Maybe since I think some of you are new, first time come to this Lincoln for class, right? So wait, hang on. So I just want to help you as much as possible. I don't know. Let me see first. MBA Global October. What class are they having? Business ethics. Wrong one. Hang on. I've taught accounting before. Maybe MBA here. Okay. Last time this was November class. So let's open the folder and see. Okay, so this is not your class, this is November class. Okay, and they have OBI accounting, right? So for example, maybe you should sort it out. Anyway, it doesn't matter. Okay, so let's look at how they do. Okay, see, so maybe he got an assignment. Okay, see, he's typing his assignment. Can I scroll down one? Oh, here, right. Methodology shift, whatever. See, he's doing. I think it's because it's opening in the Word file instead of PDF file. I should open the PDF file. See, okay, abstract a little bit, introduction a little bit. What else? Literature review a little bit. So same thing. Methodology, findings, and so forth. Conclusion. Okay. So this is an example of a person. You got any more? No? Oh yeah, close it. So maybe another person. Okay, Chan Ka Chun. Okay, he's Simon. Okay, so they are doing like this. If you can put your signature and scan is all, or you just type in the name, it doesn't matter. Okay. See, can you see he put his name and his ID here? Okay, he select current issue, digital transformation. Okay, he select this. Out of the three, he select one. So introduction, literature review, and so forth. Methodology. Number three is two or number three, literature review or whatever. Methodology, I think he typing mistake. Findings, discussion, and so forth. Okay, so that's an example of a person who's doing the assignment. Okay, now let's go back. Now you'll notice the assignment is actually something going to be like your thesis later on. If you are writing a thesis of 40,000 words, I think ODL, I'm not too sure got thesis or not. Okay, but that's how they do it. Okay, so you should write the abstract should be written last. You should write all this first. Okay, and then after you write this one already, then it's a summary, is the abstract. The reference is the APA method. If you don't know what's APA method, you go to Google, they will teach you how to do APA method. Okay, what it means is like this. Hang on. Let's open again. See, this is the APA method, the references. Okay, the references with numbers. So let's look at what he has written. Okay, as highlighted by Tan and Lee in 2022. So if I want to reference, if I want to check who is Tan and Lee, so hopefully here I can find Tan and Lee. See, so this is a reference, and if I want to find more detail, I must go to this journal or whatever it is. Okay, and that's how you do referencing. So at the end, you put the detailed APA 7 reference method. Referencing method only got two. One is Harvard and one is APA. Lincoln, we use APA. Okay, if you're not familiar, please go to internet to check, or you can ask me later on. Right, you can see, for example, this one. Okay. Now, I don't know. So far, you're okay with this? You understand what I'm saying?
Yes,
Yes,
sir.
Okay.
sir.
Yes, sir.
Okay. Maybe I should send this as an example for you. Would you want to have an example? Huh? I
Yes,
don't know whether
sir.
you want to. Yeah, I don't know whether you want to have an example or not. Okay, so for example, this group one.
Yes, sir.
Okay, let's look at group one. So group one composed of a few person. Iman, Izzat. Let's look at it. Oh, cannot open. Okay, so here is the assignment one. Okay, so look. So assignment one. See, he put 4 names and only the first person just send only. Okay, no need to send so many people to send. Okay, authorship, table of content. Oh, this also do it very well. He put a table of content some more. Answer, table of content, and then he start to write. Okay, abstract, introduction, right, and so forth. Okay, so maybe let me see first. Can I download this one? Anyone with a link? I should be able to download, but I don't know how to download. Wait, why I don't know how to download one? Hang on, Iman. Here. Okay, download. I will download, then I will share into the WhatsApp with you. Okay, is that fine with you? Okay. Now,
Yes, sir.
that is the assignment. So we go back to here, right? Then you have the presentation. Presentation, I think, is about 10 marks. Okay. So let's look at presentation. So what is presentation? Oh, wait, hang on. Before I run away, before I forgot what to do. Okay, so this is a WhatsApp group. So first, where am I now? You're here in this group. So I will first attach just now the notice, correct? So if you look at your WhatsApp, you should be seeing this notice. Can you all see? Can you all say something?
Yes, sir. Yes, sir.
So you can see in the WhatsApp my notice. Okay.
Yeah.
Next, I will attach the assignment. Hang on. I have to go and find. Oh, I'm getting very old already. By the way, I'm 69 years old. So I'm not as young as you people. Yeah, hang on. Okay, I'm sorry. Just hang on. Okay. Hang on. G.
Fully charged battery fully charged. Unplug charger.nn.
Oh, okay. So I need to send this file to you, the assignment file. So just wait. I need to add now the assignment file. The assignment question, the case study question, and the presentation question. Okay. So you have the assignment file ready. So we will now look at the case study. Okay. So the case study question is the same, right? So you are required to read the following case study, 1,000 words. So you can type after the case study. So the case study is this case study, Malaysian financial fraud, investment scam, and the national response. Introduction, defining the scale of financial damage, accounting, and so forth, right? And this is the 2 questions. So since you got 2 questions, right? You need to write maybe 1 page each, 1 page each should be enough already. So you just write at the end here the answer, okay, and then save the file and then send it out. Okay. So now this case study also got the reference. What you can do is you can read at it and try to find the answer by yourself or go to the internet to find. Okay, it's fine with me. Okay. Now the next one is the presentation. Okay, presentation question. Presentation question is very simple. If you remember just now, you're doing the assignment. So based on that assignment, you are required to do a presentation 20 slides. Just make a PowerPoint. And because this is in words, right? So you need to copy this one and go into open a PowerPoint, and then you put this one in the first page because I need to know your name and the ID. Okay. So far, any question? So far, any question?
No, sir, we understand.
Presentation is a
So-
group or individual?
No, I cannot hear you. You have to speak louder.
The presentation is an individual or group?
Oh, okay. Because the assignment is done by individual or the assignment is done by group, same. You have to follow the same. If your assignment is 1 person, your presentation will be 1 person, your case study 1 person. If your assignment is 3 person, the same 3 person must do for assignment and presentation and also case study. Is that understood?
Yes, sir.
Yes, sir.
You understand, huh?
Yes, sir.
Okay, no problem, huh? Okay, I just want to show you when we go to the Ministry of Higher Education in Malaysia, they already approved this is healthcare accounting, and this is the course learning outcome which we told the government what you should be achieving, and these are the subject, topics. There are 10 topics that we will be inside the syllabus, and we will, therefore, assignment, like I say, is 30 marks, case study, 20 marks, presentation is 10 marks. So the combined here, which you have to do, right, to give me by, oh, this is the previous student. Hang on. You have to give me your coursework, everything by 20th of March. Okay? And this Google Drive. Okay? With the naming for style of naming. Okay? Of the file name. Okay? What else? Hang on. Hang on. Where am I now? Anybody just came in? I hear a sound. Okay, there's no sound. Okay, so you need to send this one. Oh, I nearly forget. I have to give you an example, isn't it? Right? So where is the example? Okay. So just now, assignment is the example, and presentation here is the presentation done by them. Or they put inside here lah. See, can you see? That's how they do. Yeah, so I can give you this example. Okay, they can put it into. I think they put into into words, or they put a PowerPoint. They convert to PDF. You can convert to PDF or don't convert to PDF is fine with me, man. Okay, see that's how they do lah. Huh? Okay. So this is based on. Hang on. Under Iman, they are talking about impact of ESG. Okay, and okay, and sustainable reporting, environment, I think I cannot remember, social governance, something like that. Okay, so that's what the Iman has done. So let's go on. So I will download these 3 and give to you. Where's Iman one? That's the group. Oh, here, Iman. Who? Where go already? Oh, anyway, this is the case study. I need to give you another example of a case study. Here. Okay, so assignment. Oh, this is this one I think is different one. This is a alternative report. Okay, now I will give for you a case study. I think maybe he didn't submit. This also very bad color. Okay. Okay, so anyway, so for these two, I will download and give to you. Presentation, download. Okay. And download. So let's see an example of a case study. Okay. Okay, where am I now? Okay, can I close? Yeah, I can close. And I can also close this one. So it's not Iman. Okay, if it's not Iman. Ui, where am I? Okay, I need to go to, how am I going to go back? Search in Drive, my home drive, not selected. Go back? Yeah. Maybe got another person with a case study one. Just hang on. But anyway, I will send it to you lah. This is another one maybe. This is PowerPoint. Juliana is PowerPoint. No, so it's not a case study, right? It's not a case study. So anyway, I find a case study and give it to you. Assignment 1, assignment 2 should have one. Oh, here, okay. This is a case study. So, so this is a case study introduction. See, so 2 questions. So he get the answer. Okay. Case 1 with the conclusion, and then case 2, introduction, something like that. Then try to have a conclusion. Okay. So let me let me bring it down first. Is it down already? Right. Okay. Down already. Okay. So I will upload now. The next thing is that we have to do a few classes, right? So we got a for your final exam, the timetable. Do you have a final exam? Hang on. You got a final exam which composed of 40 marks. Now the point is, if you have done this one very well, it's already 60 marks. But we will not allow any marks if you don't take for final exam. So if your final exam is missing, all these marks is gone. Okay, it's gone. So therefore, you need to do this one and also do this one. So far, understand? Okay, say something.
Understood.
Make some noise or else I don't know whether are you still around or not around. Okay, okay.
Mr. Chia.
So I think no more student coming in. Okay, no more student
Mr.
coming
Chia.
in. Yeah, yes, you have to speak louder. You have to put your mic near to your phone.
Oh, okay. Mr. Chia, regarding the presentation, should
Yes.
we only need to submit the slides only, right? We do not need to
Yes.
present a recording only, right?
No, just you only give me the PowerPoint slide. No need to do any recording.
Okay.
Okay, the deadline I say 20th of April because very important because after that you will go next month you go to the next class already, no? So after that you were busy. Okay. So okay, so now So far, any question?
No,
Any
sir.
question from anybody? Huh?
Sir, yeah, okay.
No
So
question?
the
Okay.
submission date is 20th of April, huh?
Yes, yes, submission date is 20th. No, 20th of March.
It's 20th of March this month.
Yeah, so you got case study, you got presentation and assignment as example from the previous student list, huh? Okay. So you can use that as a guide.
Okay.
So if you look into your WhatsApp right now, you will see the notice, the 3 assignment question, and previous student how they do lah. Okay, November student. Okay, see March. Okay, now I want to send to you the 10 chapters of PowerPoint. Okay, wait, MBA healthcare accounting and finance. Okay, so you got 10 PowerPoint. Now I put inside to you. Of course, you should read the PowerPoint. Okay, whenever you got time, right? It's still uploading, so maybe it should be okay. Okay. Muhammad Suleiman is still a meeting. Okay. Emitted already or not? Emitting, okay. Now, if everybody in the WhatsApp group who is not in the WhatsApp group, can you say something now? Are you in the WhatsApp group? I think you should, or else you will not have the link to come here. Right? Okay. So I think that's all so far. Now I would like to talk about chapter 1. Okay. Okay. Now, healthcare accounting is a little bit different from normal business accounting. Okay. We have to consider the healthcare legislation and the peculiarities in the healthcare industry. Okay, so most of the material or ideas or theories are nearly the same as normal business accounting, but we just only have to cater for the alpha, and that alpha is the uniqueness in the healthcare industry. Okay, so we actually have, let me show you. Okay, chapter 1 to chapter 5. I don't know if you can see, I think it's a bit small. These are accounting, and chapter 6 to chapter 10 will be finance. Okay, that's how I split out. Okay, so we'll look at chapter 1 first. This one better closer. Okay. Okay, so I don't know, maybe some of you have got the first degree, so most of you will have studied something about accounting. Okay, if you are having a business administration or accounting degree or something like that. Okay, unless your first degree is in engineering, maybe you don't study. So I try to go a little bit basic on this thing, especially for those students who have no background in accounting. Okay, so we'll look at this chart first. Okay, so on the left-hand side, we have the financial data, which is like, for example, the sales and the cost and the assets the company have. Then your side, the peculiarity is maybe you also have clinical quality data, right? Patient outcome, safeties, and so forth. You also have the social impact data, the community benefit, and the equity of the shareholders, and so forth. Okay. Now, all these data, okay, can be made into usable report for future actions. Okay, like for example, we can use this data to generate report, okay, to demonstrate the profitability margin and whether are we achieving our stated mission, okay, of the company. Or we can also use this kind of report to guide us in the long-term allocation resources. Now, here I want to say something. Okay, I think I want to talk more about the healthcare industry. Okay, in healthcare industry, maybe for example, you got a hospital, okay, clinics, okay, and so forth, right? You don't have enough resources. What are resources? For example, time, money, okay, manpower, know-how, patent, technical knowledge, and so forth. So you can easily imagine, okay, your company don't have unlimited time, unlimited financial money, unlimited management acumen, or unlimited manpower, unlimited technology progress or information, or unlimited patent that is you patent yourself on, right? So they will be limited. So how do you allocate your resources? So currently, if you have one hospital, so whatever money you put aside as a budget, how much is to go to X-ray department, how much is go to blood test department, how much go to surgery, how much go to biomedicine, how much go to emergency care, okay, ICU, and so forth, right? Because you're one company, okay. But if you want to merge with another company, or you want to build a sister company, or you want to acquire another hospital, do you have the resources? Because sometimes you want to do many things at one time. Maybe you want to buy a new MRI machine. Oh, it's going to be expensive, right? At the same time, maybe you also want to take over some clinics or set up some new clinics. Or at the same time, maybe you want to open a new hospital wing, right? Where do you allocate your money? Where do you allocate your resources? Because your resources are limited. So what we have is maybe we got some sort of data for you, financial data, clinical quality data, social impact data that helps you, okay? Because this data will make some reports for you, or to guide you, or to prompt you to do a correct resource allocation. That will be good, optimal, okay? So in other words, for this class, we're looking at some of the data here, okay? Now, traditionally, financial or accounting, you have your sales, you have a total sales here. You have your expenses here, and there's a net income. So maybe here, let's say, for example, you sell here 100, here's 100. Your expenses is maybe 80. Therefore, your net income is 20. Very simple. Okay, but where you get this information from? It's the historical. Last month, last year. Last year, what is your sales? Or what is your expenses? What is your income? These are historical. Okay. Now, what happened is the investors, your shareholders or new investors, okay, may want to look at your financial performance before they invest. Why? Why? Very simple. If you are making profit, they will like to invest because so that you will pay back dividend. Or for example, if you are a bank and this company wants to borrow money, so the bank will ask you, hey, give me your financial data, which is historical. Okay. So if they see that you're making profit, oh, okay, the bank say, I will lend to you because they know you will pay them back with their interest. So the key point is this is financial, historical. It does not tell you what's going to happen in the future. It does tell you what is in the past. Now, how do we know whether these figures are accurate or not? The hospital employed one accountant. He went and cooked up the books. Maybe he got no sales, he created a lot of sales. Maybe expenses a lot, he reduced expenses, recording lesser. So the accounts need to be audited. The word is AUDIT. Maybe some of you may have heard of the word internal audit, right? Internal audit. Sorry, whenever there's a sound, I have to look at it and see whether got anybody still waiting here, waiting to enter. See? Okay. I hope next time you all come together at one time. Okay. Waiting in lobby. All right. So, of course, today is a working day. I do understand that. So, the data need to be audited by an external auditor to check whether the accounts give a true and fair view. Because the accounts is a historical performance, and many people will actually look at these accounts to make decisions. For example, a supplier, let's say a supplier of pharmaceutical medicine to you, they maybe want to look at your accounting, because if you don't make profit, you don't have enough cash, how are you going to pay them back? So maybe they say, I'm not going to deliver to you medicine, right? And so forth, okay? And also the government want to look at you because the government will tax you anyway, right? And you have some supplementary traditional finance metrics, okay? These are you have the income statement or the profit and loss. So we will use the profit and loss to calculate some ratio. The ratio from your data will say whether are you very good in your control, are you very good in your management. Okay, this will be covered in the future section. Now all these, they are looking for actually a future capital cost, whether are you going to make more profit, or you want to borrow more. So all this, okay, will be affected by this traditional. So this is the background. Okay, this is the background of introduction to accounting. So what we have learned? We have learned that every company got limited resources. They have to use it wisely. Secondly is sometimes you want to have external sources of money. You want to make a new hospital or something like that. You have to convince the investor and the bankers that you are a good lender, that you are paid back by way of dividend or by way of loan interest. So you need financial accounting information. And sometimes the bank will ask you, okay, you want to make a new wing and you want to borrow this money, and the bank will ask you, what is your projection for the future? So you may have to use some of the historical data to see trends. If your trend of profit is going up, most likely you're going to make more and more profit. So trends are very important for bankers to know whether can you pay them back in the future. Okay, so this is what healthcare accounting, not as the junior level accounting clerk recording, as an MBA student, that should be concerned about financial management. Okay, so now we go a little bit more detail. So the purpose and role of accounting in healthcare organization. Wait, one more check, just in case I got one last person coming in, no more idea. Okay. Okay. Can you all see this segment where I'm showing the PowerPoint? Can you all see? Say something. Talai Maran. Hello, say something. Is the line down?
No, sir.
Okay, so can you see this thing? These people waiting this side when I put the PowerPoint on?
No, we cannot
Like
see
this.
that.
Oh, you also cannot see. Oh, we have to wait for the sound. When the sound comes, means somebody is waiting at the lobby or something like that. Okay. Okay. So let's look at the purpose and role of accounting in healthcare management. Okay. Now, you have a lot of people that are involved that wants to know you. Okay. So creating accountability, sustaining funding, and building trust. Okay. Many people are involved. Okay, philanthropists, people want to get money from you. Insurers to want to make sure your accounting is correct because you are insuring your property with them. And taxpayer, which means the government also, they're interested in you. And therefore, the bankers and so forth, there's no limit to people who are interested in your accounting information. So your accounting, therefore, must prove that the capital you're using, okay, is used correctly. Now, for those people who are working in company, okay, even private limited or senior Berhad, you have a shareholders. What happened? The shareholders buy the shares of the company. Okay, so the shareholders give money to the company. In return, the company give them a certificate. You are the shareholder of how many shares. Therefore, you own a certain percentage of the company. Here comes the key point. Shareholders give the money to the company. Company will be maybe run by the board of directors. Now, not necessarily the board of directors are the shareholders, but they are running the company. So shareholders give the money, but they don't run the company. They have no say. Directors, managing directors, presidents, executive directors, and so forth, right? Managers, they're running the company based on shareholders' money. So those guys over there don't come out any money. But hey, they are using your money to run the business. Now, hopefully, these management people are doing a good job. But how do we know they are doing a good job? Maybe they take your money, they go for overseas traveling, or they buy expensive company car and use, or whatever it is. So therefore, in accounting, we have a thing that is called accountability. Now, how do we account to accountability? The shareholders are not in the company every day. So the shareholders rely on the financial documents. And financial documents are prepared by the company. But it must be audited by an external auditor, not linked to any company. Okay, they are external auditor, like for example, Pete, Mavic, Pricewaterhouse, Kasim and Chan. These are the people who was given license by the treasury to act as a auditor. And they will report on the accounts whether the accounts was prepared correctly or not. And therefore, the shareholders and all the other stakeholders will look at the accounts to judge whether the company is running good or not. Okay. Now, can the company bluff the accounts? Yes. Because the company hired an accountant and they, we tell the accountant, hey, you bluff the accounts. Of course. But it's the job of the external auditor to check and make sure if there's any bluff to be corrected. Or the auditor say, I give up. Then you know if the auditor say they give up checking on the accounts is really bad. Okay, so prove that the money issued by the shareholders is done correctly. And of course, the accounting information, okay, if the company is doing well, it creates confidence. Confidence in the society, whereby the company will keep on paying the income tax, okay, or the state tax, and confidence to the employees who are part of the committee, they will carry on having a job and get a salary. Okay, so if your company is running well, you expect maybe your company to survive long period, 20, 30 years, hopefully expand, bring more employment and so forth. Okay, and therefore with these two, there will be a long-term viability and for the public good. Okay, continuous healthcare delivery. Now, there are a few things we need to understand. The first thing is information. Okay. The other one is data. Data means raw data. bedside data collection, data generating, okay, bedside data collection, all this recording in the hospital, whatever, cost per case, profitability report, all these are raw data. These data must be transformed into meaningful information. And how do you translate data to information? Is who are the user of the information? The user of the information will tell you what data they need. So you need to collect the data from the accounting or from whatever area, process the data, give it to the user in a meaningful way, in a very fast, relevant way, okay, so that they can make various decisions for the doctors and nurses, and also, of course, they will analyze protocol choices, whether to do operation or not. Then you will select quality-based protocol to make outcomes, financial outcome. So let's say, for example, okay, the data show that, oh, it's very bad already. Okay, therefore, this data show is this patient very bad. Then give to the doctor will say, oh, already hit the red line or above the upper limit or whatever it is. Then the outcome is, okay, we had to put him to ICU or get the operation, and here comes the money already. Okay, all the time you must maintain quality without eroding the profit margin. Because I just hear a noise. Hang on, I just hear a noise. See? Yeah. I'm sorry. So I hope you all next time come on time, because it's not so. It breaks the rhythm of the class. Okay. So what are the standard financial metrics? Okay. For hospitality, labor productivity. I don't know. Is there any more people? Coming one by one. Okay. So we have some standard financial metrics benchmarking. Benchmarking means you can compare your company with your hospital with another hospital, one branch with another branch, or you can compare current result with the last year result or the last month result. That's what it means by benchmarking. Okay, so measure metrics like hours per patient day against regional, national averages to optimize staffing levels, for example. Track cost of medicine, medical supply. Okay, capital efficiency, return on the ROI. You may buy a very expensive MRI equipment, right? So therefore, you need to. Sometimes they even have ROI on the surgery room, the operation theater, right? Assess whether are we using enough. Sometimes it's because of this. If the surgery room is not fully utilized, maybe some surgeons recommend surgery or exploratory surgery just to make use of the surgery room. It's very bad for ethics. Okay, but anyway, so all this will give you how to find opportunity for improvement, okay, in your service delivery and also in your billings. Okay. At this junction, I want to say something. Please don't get upset. Healthcare institutions are basically, if they are not government, they are profit orientated, right? Okay, if you look at Columbia, Assunta Hospital, okay, all these around here, okay. So they are actually profit center, and the doctors, the nurses, everybody wants money for their own use, right? The doctor also want to buy new car, the surgeon also want to buy new house, of course. So that's why the fees are quite expensive, right? And we don't have a very good medical insurance like in the Medicare or Medicaid like in the US. So types of healthcare entities. So what type of can I say what type of company? Okay. So you will have governance and ownership. You can have state and municipal owned. okay, or taxpayer scrutiny, okay. If they're using this federal hospital, okay, of course you will have, this is public, no, I'm not talking about private, just talking about public first. You may have a state one, or you may have a public one, okay. And of course, they were to follow governmental accounting, which is a little bit different from business accounting. Okay, not so much principles are the same, just sometimes the wording is different or the treatment is different. And there is a very strong budget event. Budgeting is in public healthcare, everywhere is budget. They put budget in everywhere. And the problem is if you overspend your budget, they ask you why. And if you underspend your budget, right? Next year they cut. they don't say thank you to you for your good work done. Okay, so you have this the governance side for this type of bodies, and then you have operation mandate because it's public. Okay, so balancing charity care with public reporting. So it's not really making for profit, and then you need to report to the various authorities. Okay. What happens if it's private? The previous chart is public, okay, government hospital and so forth, okay, clinic kesihatan and so forth, okay. This is private hospital and or investor owned, okay. So investor owned, for example, in Hong Kong, there are many private hospital owned by family. One family own one hospital, big building, okay. We call that investor owned. Some can be private, means very big capital shareholders, many shareholders. Okay, investor own one, not so many shareholders, maybe just one family member, that's something. Okay, so anyway, the focus here is different. Here, the public one is focusing on delivery to the public. Okay, medical care delivery to the public. So they are not looking at profit. They are looking at for example, cheap medical care. They're talking about open to everybody, it's government funded. Okay, they are worried, they're more interested that you're happy with them. Okay, private is a different thing. The private people, number one, profit. Okay, because if they don't have profit, they go bankrupt. Public, if they over use their budget, they will ask for more allocation from the Ministry of Health. That's all. Right? Private different. The focus will be earnings per share. How much net profit they can get per share. The higher this one, the higher the price of the stock when the company is listed in the public stock exchange. Okay, so the requirement is robust revenue cycle management, very fast. They want to get money very fast, right? So you will notice if you go to stay in the hospital, I'm not saying, okay, every needle, every tissue paper, all will be charged, okay, very fast. Once you go in, okay, let's do the dripping. Whether you need or don't need, let's do the dripping first, right? So these are revenue generation, okay? Okay, so they are very fast in billing, okay? Billing you. So if you are staying for 5 days, after 2 days, they will give you a temporary bill first. You pay something first, Another 2 days, they ask you to pay a little bit more and so forth. Now, some of the patient may have got a insurance policy, medical insurance they buy or through their company. And if that's the case, the patient pay a little bit or pay nothing. The balance is the hospital is going to claim against the insurance company. Here comes a little bit of problem. Because by nature, insurance company don't want to pay you. By not paying you, they have more profit. You understand? So the insurance company don't want to pay you. So sometimes the insurance company like to delay you. So if you are the hospital and we are going to charge the insurance company, you better use the correct code of what type of expenses. Justify it very clearly and send the bill to them very quick and follow up quite regularly. If not, the insurance company will drag their feet. Okay. Every day they don't pay you means they have extra money to put in the bank, to put in their deposit account to earn more interest. Okay, so anyway, you need to have efficient billing to the patient or to the insurance company. You need to collect the money, and then you need extra money. You want to do some investment, you must have some strategic investment. So these are the focus. And because of this focus, so we now have to consider our accounting requirement. So separate patient revenue from non-operating gain. Accounting must distinguish core income from other sources. What are the core income if you're a hospital? Okay, patient bill. What about other sources? Now, sometimes the hospital got extra money they put in the bank, or they buy shares in another company and they get dividends, or if they put in the bank, they get a fixed deposit interest. That's other income. So we need to separate out, because the other income is not your real business. The patient business is your real business. So if I'm the bank, if you ask me for money, I want to look at your real business income. Your other income sometimes have, sometimes don't have. Okay, and you comply with if you're a public listed company, the Security Exchange, okay, Security Exchange Commission, all their rules. So these are basic accounting concept and principles. Okay, now double entry bookkeeping, debit account, credit account. Now we use the word double entry because in accounting, what is accounting? Accounting means recording of financial transactions. Okay, let's break it down. We do record. The accounting people record buy what, spend what, how much, when, and so forth. Yeah. Okay, so I repeat, accounting is recording of financial transaction. So they record in a piece of paper, or they record it in a post point of sales. So they are recording in the computer system or Excel. They are doing recording. Recording of what? Financial transaction. What is financial transaction? Anything the company does that carries with it money. So if you buy one needle, 10 cents, it will be recorded because there is a money involved. But if the boss scold the subordinate, there's no money involved. So it will not be recorded. Only record whenever there is a financial transaction. And what do we record? We record what happened and what's the result. And therefore, we have a debit and a credit. Okay. Every clinical transaction, example, patient visit, result in at least one debit and one credit entry. Then therefore, there's a balance. Why there is a balance? The balance is very simple. Okay, if I buy one injection needle, what's the action? I buy an injection needle. What's the result? I pay out cash. So if I pay out cash, $1. So cash, credit account, $1, and then debit represented by I have got the needle. So if I buy a car, so this side will be the car amount, and this is the cash balance or bank balance that will be reduced. Okay, if I pay salary, the same thing. What happens if I do a sales? If I do a sales, I will have here cash increase. I sell $10, so I receive cash $10, and this the result here is sales $10. So you are recording. And by all this recording, at the end of the month, you can collect all this recording and you can tell what the company has done, what sales has been done, okay, what payment has been done, what have you bought. And after you make all this information, okay, you can make the profit and loss to see whether you make a profit or you make the loss. Okay, or you make what is the asset or liabilities that you have. This is called the double entry system. Now, in order to do that, in order to record, you must have a chart of account. Maybe cash is one account, asset is one account, expense is one account. So you can break down. Asset you can break down maybe to cars, machine, okay, building, land, and so forth. Okay, so I'm not teaching you the basic, I'm just teaching you at the MBA level what you need to know, okay, on the service. Okay. Now, so there are a few accounting concepts that the accounting people do. When you buy a machine 10 years ago, you buy 10,000. That's it. 10 years ago is recorded machine 10,000, bank go out 10,000. So that 10,000 machine is keeping for the next 10 years or 20 years in the accounts, is still keeping as the figure 10,000. Because that's what you record. That's what you pay 10 years ago. Okay. Now, you also have to less depreciation. When you buy a machine, a car, a building, a machine, a car, a building, a lorry, or van, no land. Land basically is freehold in here. So let's say you buy a car, 10,000. And the car is going to last you, you say maybe 5 years. So every year you need to keep aside 2,000. 10,000 for the car, divided by 5 years, every year you keep 2,000. So the accounting will record this 2,000 as a reserve. Because after 5 years, you get 10,000 again to buy a replacement car. Now, whether 5 years later, the replacement car is a different model or go up in price or go down in price is a different issue. What you need to do right now is you need to reserve some money. How do we know 5 years from now what is the car price and what is the models? Maybe we buy different model, or the current model that we have, right? Maybe it's already out of stock, already been changed to a new model. So you will do this for land, for building, machine, equipment, car, computer, any items that you need to find replacement in the future. Okay, so this is one thing the accounting will do. Reserve the money. Well, if you don't reserve the money, you buy the car now, and then you don't have reserve money, and then after 5 years later on, the car break down already. You want to buy a new car. Oh, there's no money. The money already used somewhere else. Okay, so that's the issue. Now, the other one is to recognize liability. Example, malpractice settlement in your industry. So maybe you got a potential settlement identification. Somebody want to sue you because you give the wrong medicine. Okay, so do we have a problem? Event or claim is identified. Somebody want to sue you because you give the wrong medicine. Okay, so yes, we give the wrong medicine. We have to reserve money to pay back for the guy. Okay, or if we don't give the wrong medicine, is that fellow just sue for the fun of suing? We don't have to put any reserve. So this side here is talking about reserve for machine and also reserve for liability recognition, especially malpractice settlement. I hear another song already. Oh God. A meeting at the lobby. Hello. Some of you leave and then come in again. Please do not leave. Just if you have to step away, but leave the link on. Because if you leave, and then when you come in again, and then I have to stop my class and let you enter the lobby. And so that is a little bit of inconvenient. So if you are going to leave physically, don't leave the system until 6 o'clock. Okay? Sorry, please do us a favor. Now, the other concept is in accounting is we have going to call a matching principle. Okay, what do you mean by matching? We will match the cost with the revenue. Okay, we match the cost with the revenue. Now, what does that mean? Okay, in the healthcare, let's say, for example, you have the ambulance. Okay, you're charging for the ambulance, right? So you have the ambulance cost, right? And later on, day by day, you're using the ambulance to fetch some patient from their house. So you're charging them a fee. So it should be in the same accounting period. What your cost, maybe tire or battery in January, should be offset against the January revenue for the ambulance charges. That's what it means. Okay. The other way to look at it is that you have incurred a cost, there is no revenue, then you have to keep the cost until the revenue comes out, so that you can match revenue to cost to see the correct profit and loss. Maybe I give you a simple example so you can understand clearly this one. Okay. Hang on. Okay, let's say let's make it bigger first. Sorry. Let's say this is January and this is February. So let's say let's say you're selling medicine. And you use a lorry to transport. Okay, lorry from okay, your factory is in PJ to Penang. Okay, right. Now you are selling in the month of January, let's say $100, but the lorry only arrived in February. Why? Maybe there's a lorry spoil, or you're standing at the end month of January, suddenly there's a flood, fire, earthquake, so the lorry only arrived in February. Maybe very clear. Let's make it 1st of February, and in here is 31st of January, you're selling the medicine. As far as you are concerned, you move out from your warehouse already and supposed to arrive here same day. But the lorry was delayed. So what will you have now? What will you have right now is the profit. You have an extra profit. Let's say, sorry. Let's say the cost is 80. And now you will have a loss of 80. In other words, you are 1 month hero and 1 month idiot. What should you do? If there's nothing wrong, this is the situation. If there's nothing wrong, it should be here. The lorry should arrive in 31st of January, and then your profit will not be 100. It will be 820, which is actually this way. So your recording, how should you record? If the thing is actually in February, what you should record right now in your accounting, I know it's a bit technical, just hang on. Okay, what you should have recorded is this way. You cannot say your sales is in January, because maybe your sales was delivered only in February. So the profit will be sitting in February, not January, and not this way. This is the worst way. Okay, that's what it means. So you must put correctly. See, if you don't put correctly, you say your sales is here and lorry only arrived here. So you have 1 month very huge profit and 1 month no sales but got cost. This is wrong. Is this correct? No, because only arrived in Penang only in February. So this should be the correct way to do recording. You understand? So actually, if that's the case, January has got nothing. Only February got something, because the actual transaction is here. Okay? But anyway, anybody know more? I know it's a bit difficult for you to understand, because some of you haven't studied accounting before. Now, the other principle is called maturity. Sometimes you small one, we don't care so much. Okay? Like if you buy a very heavy machine, it will be capitalized as an asset. You buy 10 cent, 20 cent eraser, right? Some ballpoint pen, you treat it as expense straight away. What's the difference between an asset and an expense? An expense is you charge out in that period that you incurred. An asset is different. An asset, you buy the big money, you do depreciation over 5 years, 3 years. You reduce the expenses based on time or based on usage units. So it's over a longer period asset. Okay. Now the other one is consistent. If you are consistent in your accounting principle, you will follow a certain accounting principle. Let's say all cars is 3 years depreciation. All machine can last 10 years. If you are consistent in this approach, then please continue. Okay, now, because of these principles, and these are basic principles that all accounting people should follow, it makes investor life easy. Now, I'm from UK. I want to invest in Johor Bahru Hospital. Johor Bahru, give me your profit and loss, your financial documents, your financial result. I'm from UK. Okay. JB Hospital, give me your data. I will look at your data and I will know that you are making your accounting based on this kind of principles. Therefore, I can make a judgment as a UK investor whether to invest in you or not. So in other words, having multinational acceptance principles makes worldwide investment, worldwide borrowing easier. Now, can you imagine if I am a UK investor, I want to invest something in another country, and their accounting rules is different. I'm not familiar. I don't know. They report profit or loss. I don't know how they report because they are not following the universal accounting principles. Therefore, I hesitate to invest in that kind of country. Okay? So this is important for principles. And we have a meriting revenue and expense recognition, matching principle, clearer margin, actual profit. You can read from here. No big deal. When do we recognize our sales? Okay. Now, when you're at a hospital, you treat a patient. The patient show you the insurance card. You accept it, you treat the patient go away. Now you have to claim from the insurance company. The money from insurance company do not come in. Maybe lucky same month, not lucky next month, not lucky maybe half a year. Maybe insurance company say you charge wrongly lah, wrong use code lah, or something is not covered in the policy lah. You know, they delay your payment. So when do you recognize? You recognize there are actually two ways of thinking. You recognize the sales when it's done. Collecting money is a different issue. Okay, January I sell to you. I give you March to pay. So I will record the sales in January because my expenses was also incurred in January. My expenses was incurred to help me to make that sales. Okay, so it's on January. So sales and expense. What about the money? Money received March, April, May. Maybe don't know. Maybe insurance company go bankrupt, right? Don't pay you. So that is called cash flow. Sales and cash flow is different. Profit and cash flow is different. Sales minus expense equals to profit. Okay. Sales minus expense equals to profit. It's different from cash flow. You recognize you have done a medical procedure. Okay, I charge you 10K for surgery. The expenses is I must pay the surgeon, I must pay the electricity and so forth. So I make a profit of 2,000. Now, I make a sales of 10K. I'm going to claim from the insurance company. 5 months later, that is 5 months later, the cash flow comes in. So when you talk to the bank, when you borrow money, or your financial accounting people, when they look at your cash, they need to forecast the cash flow. When there's not enough cash flow, they need to borrow money from the bank, short term or long term. Because if you don't have money, how are you going to run your business? You may have profit, but you have no money. because you cannot collect from your customer. You cannot collect the cash from the customer. That's the key point. Okay, it will be considered part of financial management, but as a general discussion, okay. So is it better to forget about the sales and we just do cash accounting? We just record only cash. Yes, you can do, but it's not recognized by the law. Law recognizes you to do normal accounting, not cash flow accounting. Why? Oh, there may be many reasons. Maybe under the tax subject, you will learn that you will come to it. Okay, but anyway, for a company or healthcare to survive, they have to monitor their cash flow very nicely. Okay, what is the current cash you have? What is the cash you will receive for the next week, and what is the expenses we're going to pay for the week, minus it. Oh, we are short for that particular week. Now we are thinking of how to borrow the money short term. Okay, so revenue recognition. Okay, the other one is called the going concern, another principle that your company will carry on business. So your value, the value of the company is because they carry on going business. If a company is going out of business, going to go bankrupt, they have to sell their asset, car, building, equipment. There are many jaws outside. When people know you are going to close down and you have to sell your asset is worth $1, they will say, I only want to buy 20 cents. That's all. So therefore, the principle of going concern is very important. The auditor, when they audit the report, your historical report, when they audit, they will see whether this company is it viable or not viable. If it's not viable, no going concern, no company will invest in you. No bank will lend to you. Okay, so you can come out the periodical report, monthly, quarterly, semi-annually, annually, okay, to react to changes. Is your company going to close down? Okay, now of course, hopefully you don't have this kind of situation, but if you have, you have to take a different type of management action if your company is having financial difficulties. Okay, financial reporting. Okay, these are a few documents from your record. Example is the balance sheet, the income statement, and the cash flow. The balance sheet will show you exactly what is your asset and liability. I will show you later. The income statement will tell you you make profit or not. And the cash flow is to show you where is your cash coming in and how is your cash going out. So we will now, instead of reading this, we will see the actual example. This is a income statement. Okay, this is the income statement. It shows sometimes only 2 years, sometimes 1 year. You can do by monthly. You can show 2019, 2018, or you can show 2019 first half versus 2018 first half. You can show your company's name here, your competitor's name here. You can, if you have the data, you can do comparison. Okay, or you can also show your own company by trend. The trend can be yearly trend, half-yearly trend, as long how much data you put in. Let's look at the documents. It say you have the sales, revenue, and this is some of the expenses, salary, supplies, depreciation. That's why we say we reserve the money for replacement of asset, bank interest, gain or sale of facility, whatever. So here comes the gross profit. Okay, gross income before income tax. Then you have to provide for income tax. I think Malaysia is around 20%. Then here's the net income. Okay, so forget about this line. So anyway, this is the net income. That net income divided by the number of shares will give you the earnings per share. Now, earnings per share is a very important criteria. That means if I put $1 to buy a share, and in that year, that $1 can generate how much income back to for the company. Not necessarily the company will give you dividend. It's only how much the company used the $1 to generate the revenue, the cash, the net income. That is an indicator of how good the company is, right? That's all. So the trend should be a good trend. And let's say if I want to sell my shares, I last time bought for $1, now the earnings is $10, and maybe I want to use a price earning ratio at 5, I will sell you $50 one share. I will sell you $50 one share. The earnings is 10 because you're going to keep the share for 5 years. So if you're going to keep your share for 5 years, every year will be $10, $10, $10. So with $50, so you better pay me $50 now. It's up to you, the buyer, whether you want to negotiate with a lower price earning ratio. Okay, so this is called the EPS, earning per share. It's a very important criteria. Okay, so how much is your share? So if your earnings is $10, now what happens if right now your share is $20? Your share price is $20 and the earnings is only $10. Hey, you get 50% back. Is that good or no good? Or if your share right now is $1, then you go 100%. Right? So you will look at this earnings figure not just by itself, okay, by the price of the share. Because it's earnings per share. There's another index that is called price per share. How you get a price per share? A public listed company, price per share is traded in the stock exchange. Every day you open the newspaper or you go to the internet, you can find the price per share. Okay. Now this is called the income statement. What does it show? It shows obviously a trend. The sales, is it increasing? Is the expenses increasing or decreasing? Is the profit increasing or decreasing? Why? This is trend. If I see the profit is going up, so let's look at this earnings per share 6 something, 10, 90, 10, 27. Oh, here very good. Here go down a little bit, isn't it? Right? Here go down a little bit, isn't it? Right? 10, okay. So how about 2010? Okay, we don't think it will be grow as much as $4. Maybe go down a little bit. Therefore, that's a trend. So the more the years that you have, the more you can see the trend going up or going down trend. And then you can make your decision accordingly. Now, the other one is called the HCA Healthcare Incorporated. This is actually I extract out actual healthcare. These are American company actually. Okay, these are asset. These are the asset. Current asset is cash. People owe you money, inventory, property, land, building, equipment, then accumulated production. So this is the total asset. And this asset is have got other like investment. They got extra money, so they invest in goodwill, some other things. So this total asset. So total asset is increasing 45. Okay, so the company have 45 million asset. Okay, at the same time, he owe people money, account payable. Maybe he owe to some sort of supplier. Right? He owes some people, salary have not paid yet, long-term debt, then short-term debt, and this will be the stockholder equity, retained profit, something in minus, non-controlling interest, so this is also 45. So this 45 is equal to this now. In other words, the asset must equal to liability. Liability is, this is the liability, current liability and long-term liability, and this is a stockholder. Okay, so what can we say? We say like this: the company has $45 million asset, of which financed by debt. So it's financed out of 45, 7 million is financed by the current liability. These two is financed by long-term debt, bank loans, and negative because this is more than 45. So actually the shareholder is actually now minus sign. It's actually making a loss, this company. This type of company, very dangerous, going to go out of business soon. Okay? That's all. Maybe they're not making enough profit. So even though profit is the profit they show, they 35, very good, right? But because of maybe other reasons, they are not doing well. Okay, balance sheet. Okay. Now, cash flow, I didn't show cash flow here. It will show in subsequent chapter in the second part. Okay. So you need to disclose in your accounting you have any malpractice contingency. You need to report if you got people going to sue you for malpractice. Charity care policy, payer concentration risk, Medicare, Medicaid, whatever, debt convenience threshold, okay, to maintain. Then independent audit. This is like, for example, Pricewaterhouse, your financial statement, external auditor will come to give your opinion. Depending on this opinion, if the opinion is okay, means you can carry on business. If your opinion is not okay, right, your shareholders will want to bankrupt the company. Because if it's not okay, it becomes worse and worse. Therefore, the company will make more borrowings. Okay? Or if you cannot pay people, the bank will sue you for bankrupt. Okay? So anyway, this one is for US side, so not important. So you need to keep accurate accounting books, okay? Because the accounting book is a foundation, okay? Certify your record, certify Medicare cost report, adherence to a bond if your company is issuing bond certificate, prevent penalties, reputation damage, and so on. Financial, provide early warning line. So if you're doing your accounts on a monthly basis and you're doing your cash flow statement on a weekly basis, and you find something is wrong, so you provide actually early warning for you to take up some countermeasures, okay, and so forth. Nothing. So this is the first chapter for introduction. Okay. Please go and read yourself. Okay. Now it's 4:40. We started roughly around 3 o'clock, so it's 1.5 hours. Okay. I'd like to have a 5 minutes break. Okay. Let's say a toilet break or something like that. We come back. Okay. So far, any question? Say something.
No, don't have.
Okay, we take a 10 minutes break lah. Take a 10 minutes break. We come back at 4:50. Okay. Do not sign off. Do not sign off. No, until 6 o'clock. No, now break time. Yeah, now break time. I know, I had to do that. This is a problem. No, you see, you get to the long chair. Hey, the one, still. The one I think you. How many students altogether? the window all close and close by itself. Oh, the wind so strong. For how you breathe in so far. Okay, everybody say something.
Hi, sir.
Yes, sir, we
Okay.
are back.
Okay, we are back now, exactly 10 minutes. So we now will go to chapter 2. Okay. Healthcare financial environment in Malaysia. Okay. Because the subject is accounting and finance. Okay. Now, these are the contents. Okay. First one, characteristic of the healthcare industry economic structure. You all can see the PowerPoint, huh? Say something.
Yes.
Yes, sir.
You can
Can
see,
see,
huh?
sir.
Okay, good.
Yes,
Okay.
sir.
First, I want to talk about market failure and public good nature. Okay. Uh, Unfortunately, in Malaysia, the healthcare quite significant market failure. Okay. Information asymmetry between doctor and patient. Information asymmetry means most likely the physician got more information than the patient. Doctor don't give so much information. Okay. We are Asians, so sometimes the doctor don't want to panic you. Okay. And sometimes even if the doctor tell in detail a lot of medical term, he got no time to explain, and you get panic. Okay. So therefore leads to uncertainty. Okay. Leads to a lot of uncertainty. Let me make it bigger. Okay. Can you see my cursor? Say something. Can you see cursor?
Yes, sir.
Can.
Okay. You can see now the red dot. Okay. So this leads to uncertainty regarding illness, timing, and severity. And so externalities such as herd immunity necessitate strong government intervention. So the ministry, this is the Malaysian Ministry of Health, plays a crucial role in budgeting, price control, subsidy to ensure equitable access to healthcare. Now, I will use in this class all Malaysian examples. I don't know, maybe some of you are foreigners, so many countries. But anyway, Lincoln is in Malaysia. So in this class, everything is about Malaysia law, Malaysia systems, and so forth. It may be nearly the same as in your country. Okay. Public good nature, that is what the government wants. The government wants to ensure universal access to various intervention. Okay. Addressing market failures. So let's say, for example, there's a COVID. What does the government do? Buy a lot of vaccine and so forth. Okay. And in many places, you have got a government hospital, and more important, you can have government clinics. You can have dental clinic. You can also have normal medical clinic everywhere. Okay, I think foreigners pays more money, maybe RM1 or RM2. For us Malaysian, most likely it's free for public. But if you go to private, it's a different issue, right? But private one, you have to pay. Okay. Now, which is better, private or public or private? It depends. Okay, it depends. As far as equipment and medicine, government is better. Government will buy the original medicine or as good medicine, and the equipment, because government got big budget, can buy a lot of good equipment. Private hospital infrastructure looks very nice. The building looks very nice, right? But they may not have so much money to invest in high-tech equipment. Okay, and sometimes because they are profit orientated, they may buy generic drugs, which is cheaper drugs, can use mainly from India. India makes a lot of generic drugs. It's cheaper. So it depends on you. If you don't want to wait long time, you go to the private. If you can wait, you go to the public. And of course, public is cheaper. Wait. Okay, long time. Private, basically very short waiting because they want your money fast, right? Okay. That's about it. Okay. Now, two-track system, public and private mix. Now, do we have a mixed one? Okay, a good example is in the MU, Malaysia University Hospital. Okay, this is a university. Okay, that has got a hospital, and that hospital actually is a government hospital. But within the government hospital, they farm out. They let some private doctors to come in to run certain part of the facility as a private hospital. A good example is either dental or normal medicine. They have a farm out private. Now you can have 100% private like Asunta Hospital or Columbia Hospital. You have the other one, the public hospital, like for example, Hospital Kajang, Hospital what you call that one? Hospital Selayang. Okay, those are public. You have Sunway in the center also got. Sunway Hospital is private, okay. Sunway is private. You have actually MU sometimes got mixture. Okay, parallel system. So where you go, it's up to you. You can select, right? You can select 100% public, 100% private, or you can select somewhere in the center. Now, somewhere in the center, the fees are not that cheap also. Okay, that you want to know. Okay. Funding, okay, public healthcare funding, national budget, public one, under health allocation made through the budget every year, October budget, they have allocation. Okay. The private, well, you guys pay lah. That's all. Okay. Whether you guys pay or insurance pay. Okay. Okay. There is a lot of integration, and you see it very often, man. When a patient is so sick, the patient is in the private hospital and is so sick, about to die. You know what the private hospital do? Ask the relative, send it to the public hospital. Why? Because they know sometimes the public hospital got very experienced doctor and very good medicine and very good equipment. Actually, don't think public hospital is second class. No, it's the waiting time that causes you to think it's second class. Okay, if you take away the waiting time, the public hospital is, I think, much better than the private hospital because they have all established doctor. They got good medicine because the government not going to buy false medicine, and they got money to buy equipment. Okay, that's why. So the private is the public is very good. Okay, so you can see very often when a patient is about to die, the private hospital send them to the public hospital because the private also don't want to have this, if they die, they have a bad name, whatever it is, that kind of things. But if the private hospital using the ambulance to send the patient to public hospital by law must accept. Okay, that's by law. It doesn't care whether you come by yourself or you come from a private hospital. If you are sick, you go to hospital will accept. You go to public hospital will accept. Okay. Okay, now, healthcare, you're going to have a lot of high fixed costs. You have got to make a building, right? Bring in all the rooms, bring in all the doctors, bring in all the nurses, bring in all the aircon. Let me tell you, the aircon is expensive. Bring in all the, lift. Okay, these are very expensive things. Then operating theater equipment, very expensive. Okay, so it's capital intensive in nature, in healthcare. Now, what about a clinic? A normal clinic is okay. But nowadays, we have more specialized clinic. They have more tests, health screening of all kind of equipment inside there. So it's also capital intensive. Approximately 70% of the costs are fixed. That's the difference between fixed cost and variable cost. Fixed cost means every month you must pay. Salary, rental, okay, maybe to a certain extent, electricity and water. These are fixed costs. Every month you pay, right? Variable cost is some you don't pay. Okay, you use, you pay. You don't use, you don't pay. Okay, let's say, for example, the hospital do not have an X-ray machine. So they will subcon out this X-ray. So that will be a variable cost. When they subcon out the X-ray for the patient to be X-ray outside, X-ray clinic, that is considered as a variable cost. But if the X-ray machine with the X-ray technician is inside the hospital, technician is earning monthly salary, that is a fixed cost. Now, why is it important to differentiate? Because whether you're running a business or you're running the hospital business, you run or don't run, got patient or no patient, fixed cost normally is there. So better you run. Okay, but more patient. That's why private hospital very fast want you to go in and want you to go out fast because they want to collect money all the time. Collect money because the bed turnaround must be very fast. Okay, so imagine MRI or IT system. These are very high cost. Okay, make a building how many years, right? Buy the land in this. Okay. Now, here's a very strange one. Supplier induced demand and regulation. Okay, supplier. Who is the supplier? Maybe Abbott Laboratory, Pfizer, okay, the American one. Maybe some other company, Bay and Baker, okay. Some smaller one from India, generic medical medicine suppliers. So there can be a control. Okay, the supplier will induce the demand. What does this mean? Okay, so if you buy a lot, the cost go up because demand more than supply. So a good example is gloves. Malaysia is I think #1 manufacturer of surgical gloves, medical gloves. So at one time, we export a lot of gloves overseas. Therefore, the amount of gloves in the local domestic Malaysia price goes up because a lot is exported. Why is it a lot exported? Because outside people, foreigners is going to pay more, right? So Malaysian glove, maybe sometimes they export more. Left behind small volume for domestic, and therefore the price goes up. What should you do? You should try to get not one supplier, 2 or 3 suppliers for certain critical items. Okay. Now, the Malaysian government also don't want to let this supplier control. You see, when you are sick, you have to buy the medicine, you have to buy the medical supplies, right? The injection, the gloves, or whatever it is. Okay. And because of that, the Malaysian government do not want the Malaysian citizen to suffer unnecessary, especially when there is a monopoly or oligopoly sort of situation. So actually, the Malaysian government have a thing called a maximum billing guideline. And then they will audit the service provider, the clinical service providers. Are they giving the correct medicine? Are they giving too much medicine that is not needed? Affordability and mortality review. Who died? Why they die? Okay, that kind of things. So there are a lot of regulations. Okay, so impact on the financial management is, okay, it helps in managing the cost for the consumer. Okay, you don't. I think the country with the worst medical care in terms of cost is in USA. Okay, so everybody must buy insurance plan because it's so expensive. And why is it so expensive in America? Because the American, the doctors, they are very good at making monopoly. Okay, very hard to pass the exam, medical exam, right? And very expensive to set up medical facilities. So once they set up, they jack up the price. Okay, they really jack up the price in US. Now, if you compare that one with UK, UK have got a social medical program. It's a very generous program. Okay, it's something like Malaysia, but not as good as Malaysia. But they also have a long wait time. Okay, so you can have 2 type of private. One is the terrible one like US. very, very expensive, but very good if you can pay. The other one is in Malaysia or in UK, so adequate, nothing special, and in public you don't pay. Okay. By the way, in Malaysia have a lot of medical tourism. You'll be surprised. In Singapore also, a lot of people come in, for example, from Indonesia, right? They come to Malaysian hospital because it's cheaper here and the skills are better than in Indonesia. So we call it medical tourism. Okay. Labor cost, okay, and the skill mix. Okay. So under operating expense, okay, 60%. Now is it, sir, fixed cost is 70%. Yes, that is for total fixed cost. Okay, big item is 70%. Okay, but besides fixed cost, you have variable cost. So the variable cost, our variable cost, 60% is labor cost. Nurses, okay, technicians, maintenance crew, okay, doctors, locum salary, and so forth. A lot, okay, 60%. And people become more and more specialized. Hardly you find a GP. Right now, GP want to specialize. Childcare lah, you know, kidney lah, thyroid lah, nose lah. Everybody want to specialize because that's where the money is. So therefore, the labor cost is expensive. Now compare that is in the private. In the public hospital, they also got specialization. But because they're working in the government, their salary basically not so high. But they got other benefits, let's say, for example, retirement benefits and so forth. Okay. So dominance of labor cost, if you're a private, okay, skill mix, okay, skill mix and wage dynamic. Specialists, very few. So the demand, very huge. Okay. Actually, in Lincoln, our faculty of nursing is a very strong faculty. We have a lot of students study nursing. Why? Because nurses are needed all over the world. The nurses that graduate from Malaysia, many of them are working overseas, even Malaysians. They go to Saudi Arabia, they go to UK or whatever, US. There are shortage of nurses all over the world. Okay. So skill mix, some not so good, mix. Okay. Now healthcare payment system, how do you pay? Public hospital, they not so worried that you pay or don't pay because public get their money from the government. Every October budget speech, here comes the annual allocation, okay, of the budget. It's based on historical cost. So last year you get how much, this year you get roughly that amount. Population ratio, did the population go up or go down? And political priorities. Sometimes the government say, okay, I want to have certain priority for certain people. Maybe now there are certain countries, like for example, China and Japan. Older people, there are more older people, fewer younger people. Okay, so their priority is a little bit different, right? So over there, their healthcare, maybe they consider to treat more old people. So wheelchair lah, that sort of orthopedic treatment will be more. Now, if you compare with Indonesia, where there's a lot of young people, they sell lesser wheelchair, right? They have lesser orthopedic sort of problems related to old age. Okay, old age disease, like for example, Alzheimer, what else? Hyperpressure, diabetes, all these sort of age-related, right? Will be very much focused in countries like China and Japan, but not so much in Indonesia. Okay, but that is for the public. That's how they allocate their money. Okay, at one time we allocate a lot of money for drug rehabilitation, right? Now the drug are not so big serious problem, so lesser money is allocated. Okay, so then the other one is tax-based budget appointment, actually universal have be near 0 point of care payment. So this was for the public lah. Like I say in Malaysia, like if I go see doctor, the hospital public free, even medicine, don't get how many visit, don't get how many years. Okay. So if you look at private hospital, little bit different. You pay. Right? So you actually have to pay. And actually, there's a thing called a private hospital fee schedule by law in Malaysia. It caps, it control the annual fee increase at the consumer price index plus 3%. Now, in Malaysia, historically, on average, the consumer price index is 3%. That means in every year, the private hospital can increase 3 plus 2, maximum 5% of their normal fees from last year. Okay, it's called a cap. Okay, so I think it's better to have a cap. What happens if there's no cap? If there's no cap, private hospital can charge anything crazy. And people a long queue, they cannot do anything, so they go to private hospital and then they will get very, very poor. In the US, because the medical care is so expensive, people get into lifelong debt because of the family get into lifelong debt because one member, maybe the grandfather sick, had to go to surgery, very expensive. Okay, but Malaysia is better. So doctors, healthcare provider are pay a fee for each particular service rendered regardless of the outcome. So you don't pay after you are cured. You pay when you see them. There's fee for service. Okay, I think it's the normal all over the world. So we need to balance. As a hospital in the private, you need to know how much you can increase. You need to know how many patients, forecast how many patients is coming. Then you need to know how many resources you need to spend on providing the service. If you are a little bit out, you may make a loss. Small loss. If you're out a lot, God bless you. Okay, you'll be bankrupt. Okay? Not for the public. Public is okay. Okay, diagnosed related group case mix funding. Okay, the DRG, diagnosed related group funding, model reinforced public hospital per week discharged. Per week discharged. This is for just shorter length of stay and the conversion of procedure to day surgery. Okay, so they have a metrics table. They put the weight. Okay, add up all the total weight must be equal to 1 anyway. Derived from the national cost sampling and base rate vary by region to reflect wage increases. This is not popular in Malaysia, but it's very popular in developed countries. Okay, so they will calculate to see how much they can get back the money. Okay, funding model. Okay, prospective payment and donation related group match. How it works? A patient is admitted to hospital. The doctor diagnose the patient and record the procedure performed. So you come in, the doctor say, oh, okay, you got kidney cancer. So you perform it. Then the insurance company comes in, they assign the case to this category. Then the hospital receive a preset payment. That's it. So if that means what? That means the doctor cannot over surgery. The hospital cannot overspend because Medicare, the insurance company only pay a lump sum. For example, you admitted with pneumonia, fall under the pneumonia DRG, Medicare pay the hospital a fixed amount, 7K. If the hospital spend less, fine. If the hospital spend more, terrible for the hospital. Okay, so this already know already. So they already got this table, and this is issued on a yearly basis, so they can actually see how much the insurance people want to pay for this type of procedure. That's all. Okay. So what does the provider do? They have to be very careful, because the code is very important. Fall under which code? Okay, fall under which code? So capitation in primary care network scheme peduli. This is Malay. Scheme is English. Peduli siap take care of health. Pay primary care network a fixed per capita monthly fee. This fee cover basic outpatient fee drugs. Provider provide the risk which promote preventive care and cost-effective management. Okay, so this is a Malaysian scheme. Okay, it's a you'll give them a fixed capital, fixed monthly fee per person. There's a charge There's a fee. You see 10%, then times this monthly charge. Okay. Incentive surplus fund are shared equally. Okay. Quarterly, incentivizing provider to invest in chronic disease register and generic prescribing, help in managing costs while improving patient outcome. Anyway, this is a Malaysian model. I don't know whether your country has or not. Okay. We call it scheme peduli sihat. Okay. Now, value-based purchasing emergence. Now you have this thing again, it's a Malaysia one. My Help Rama, linking a portion of hospital payment to readmission rates and patient experience scores. Okay, so the private hospital sometimes, of course, treat patient very well because they want to have high good score. Okay, so incentive to provide quality care and take care very well. Share saving, split 50-50 between providers and payers. Okay, the payer is basically the government. Okay, early data reduction in plan readmission, future expenses, or this is the scheme for My Health Rama. So if you are a private hospital, please be aware of this scheme so that you can claim scheme Peduli Sehat and also My Health Rama. Okay, My Health Rama is actually background is to provide for average to low income Malaysian to stay in private hospitals. Okay. Because no need to wait so long in the public hospital. Okay, My Health Rama. Okay, third-party payers and insurance model. SOXO EPF also got again Malaysian. SOXO health insurance, SOXO employment injury, and EPF I Lindung. Okay, it's a Malay word. Is somebody entering or somebody going out? Ayo, Simran Kaur, are you there?
Yes, sir. Yeah, I'm here.
Did you just join or you join and you leave and come back
No,
again?
my connection, my handphone battery went out. So that's why I joined from another source.
Yeah, okay. Okay.
Thank you, sir.
Okay, okay. So SOXO, don't forget, SOXO, you have an employment injury scheme. Okay. So they can claim from there and SOXO will pay directly. Okay. And also EPF I Lindung provide coverage for work-related trauma and critical illness. Okay. Actually, this scheme is the employer deduct the salary of the employee for SOXO and also for EPF. Okay. And also the employer contribute on top of the deduction, and both these two amounts will be sent to both the SOXO and EPF board. So if you are sick, okay, then you can claim. Okay, the SOXO and EPF. Okay, then the oversight, the money, the government actually put the money in government bonds to earn interest. Okay, and from there they can pay dividend to the EPF people and so forth. Okay. Private insurer product and riders. Private insurance in Malaysia offer a variety of hospital plans. I think some of you all know if you are working in company, the company may pay for your hospitalization. Okay, sometimes critical illness, some more insurance plan. Okay, depending on the level you are, whether you are a clerk, an operator, or a CEO, so they got a different scheme, of course, a different cost and a different benefits based on money you pay to the insurance. So inclusive of room, food, okay, some treatment, medical treatment, and so forth. Okay. Now there are certain things called riders. Okay, there are certain things that are called riders. Okay, what do you mean by riders? Conditions. Okay, there are certain conditions. So some are good, some are bad conditions. Like for example, some insurance people will not pay if you have a pre-existing. Okay, before you join the company, you got high blood pressure. Okay, before you join the company, you have high blood pressure. Now you join the company. Now the company buy the insurance, the policy for you, and your high blood pressure later make you go to hospital, and then insurance company say, "Oh no, 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 no. Before you buy this insurance policy by the company, you already have a pre-existing condition of high blood pressure. So actually, now you cannot claim. Okay, be careful. Okay, pre-existing conditions. So if you are sick, sometimes you have to declare in the insurance company you high blood pressure. If you keep quiet and they find out later on, they're not going to pay. Okay. Okay. Regularity measure introduce patient price sensitive and curb moral hazard. Regulator impose a minimum 10% co-payment requirement from 2024. So they have to pay something first, aims to balance affordability and financial sustainability. This is in case you take a treatment, you don't pay lah. You run away. Okay, because you run away. So just in case, because you're gonna bankrupt all the hospital, so sometimes they want you to pay some advance money first. Okay, as much as up to 10% of their expected charge. Okay, so it will affect a lot of insurance products and so forth. Okay. Now, Takafu and Sharia compliant model, of course, you know, Malaysia is an Islamic country. We have Takafu. It's actually insurance, but Islamic based. Okay, it's a little bit different, but basically the principles are nearly the same. Okay, so they for Sharia, everybody contribute to a share fund to mutually cover losses and risk across a broad portion of the people. Okay, everybody share. Okay, pool the donation. Wakala fee 5% contribution higher than conventional commission. No? This is actually very strong. Takaful. Good. Fine. Islamic finance started big business in Malaysia. We are number one. It's not Middle East. Okay, not the Arabic country that started Islamic finance. Islamic finance started very big. First country to do it very big is Malaysia. Okay. Therefore, when have Islamic finance come, here comes the Islamic insurance, which is the Takafu. Okay. So I think Malaysia is, I think maybe still number one. I'm not too sure for Islamic finance. When we talk Islamic finance, we're talking about Takafu finance, Islamic banking, Islamic insurance, Islamic shares compliant, and many things that's related to finance. Okay. So employer group plan, I think if you are working in a company, maybe you're familiar with this one, right? Group plans, okay, you can also add in your own self-insurance, okay? So large company, okay, often self-insure through trust fund. What does that mean? The company don't buy insurance company with the employee name. The company put the money in the trust fund. The trust buy the insurance policy for you. Okay, but now quite common in American company. Okay, the company don't want to get into this kind of go to insurance company lah, verify their employee lah, go to a hospital, everything. So the company put the money in the trust yearly, the donation. So the trust is going to buy the insurance policy for the employees. Okay. This one purchase stop loss in reinsurance to manage risk. Stop loss means they only limit up to a certain amount of the claim. Okay. Third party administration manage it. Data ownership incentive. Okay. Employers own the claims data and make them to implement cluster wellness project. Oh, yeah. Now I want to be a little bit different here. Beside this employee health plan, there is another one. What happened? I don't know what's the name. Okay. For senior management, normally the manager die. The company buy the insurance for the company, for the employee. The employee die. The money go to the company first. Understand? And then the company take the money and give to the wife. How much? It depends on the company. It's not one for one. The logic is the company buy insurance under the company's name for the employee. The beneficiary is the company. That is different from your own self buying that insurance. If you buy your own self-insurance, okay, own self-insurance, you die, based on your will, you give to your wife or your children. But when the company buy for you this type of insurance, the beneficiary is the company. And the company should give some amount back to the wife, but it is not a legal obligation. Sometimes the company give exact amount, give lesser. Sometimes they give even more additional donation. So it's a case by case. Okay. Okay. Anything else? Provider payer integration initiative, integrated model. KP, a very famous private hospital in Malaysia. KPJ, everywhere got healthcare. Align utilization management with big occupancy target. This model share electronic record and bundling pricing and reducing duplicate tests. What is bundling pricing? A bundling pricing in the hospital industry is, for example, you do X-ray, $100. You do blood test, $100. So you do two separate, it's $200. Bundle means you do these two, we sell you 150. That's called bundling. Why? Because they can at least sell two. Okay. If they sell separately expensive, some people only buy one. They won't buy the second. So let's say you 100. So one is a blood test, one is what did I say? One is a blood test, one is a high blood pressure test or whatever test. Two type of tests, right? 100. So bundle, do two, 150. That's all. Okay. So this is integrated model. It's good for the private provider and also sometimes good for the patient because it's cheaper. Okay, it's cheaper. Regulator monitoring. Okay, they also want to look at your referral patterns. If a hospital keep on referring to expensive surgeon who do unnecessary surgery, this would be a problem. Okay, okay. So this oversight ensure fair competition and also protect patient interest. Impact of financial management. You as a hospital provider, please integrate various type of scheme that's now shown. Okay, so that you can do a good financial management. Cost pressure and revenue challenges in healthcare. Now, by not now lah, another 5 years more lah. 2030, 15% of Malaysians will be over 60. I already over 60. Okay, doubling the demand for dialysis, okay, and diabetes. These are related to old age. Okay, the aging population possess significant cost pressure on the healthcare system, especially for the public. Okay, healthcare system. So, first thing, Malaysia getting old. Okay, second, the surge in non-communicable disease is driven up healthcare costs. The Ministry of Health represents increased cost of 4 billion annually, starting the annual budget growth rate of 4%. So we are having our growth of the budget 4%. Okay, increase. Okay, non-communicable diseases. And we are not talking about a simple cough or whatever it is. For example, Alzheimer's, this is not transferable. Diabetes, these are not transferable, right? I mean, it's not like cough lah. You cough and then the other person get that is a communicable. Okay, we are not talking about your father and son. Father transfer the thing to the son. No, that is what is the DNA one. This is not about it. Okay, so we have a lot of this kind of disease is standalone. Okay, so it's increasing. Okay, maybe because of stress or lousy environment, lousy air, lousy water, or lousy food, or whatever it is. Okay, so the public sector have to reallocate a lot of money from infectious disease program. Therefore, infectious disease program will be going down. For example, measles shots, right? These are polio shots. Okay, these are infectious disease. They may have to go down the budget to spend on the non-communicable disease. Okay, so in the sense we are lucky because we don't have high baby growth, but in the long run, we have lesser young people supporting more old people. Okay, high cost technology inflation. Okay, robotic surgery, consoles, protein beam therapy. I also don't know why this one. Okay, protein beam therapy. Okay, all these costs, they charge it to you. That's all. Okay, technology inflation. Insurer response, excluding imposing limit on high cost technologies because it goes the cost become very high. So they chop on it. Okay, they chop on it. Therefore, you will create problem for you. Somebody want to enter again? Sure one. Okay. Where are we now? Fox. Okay. Doctor to patient ratio 1,000, one doctor 454. Compare with the average 800. So we still don't have enough doctors. This shortage driving up locum rates and overtime costs for doctors. Okay, and therefore will come back to you. Wage escalation, the public sector overtime bill reached 550 million, crowding up non-salary reimbursement budget. Private hospitals are increasing salary offers, contributing to premium inflation, and insurer new notification. Maybe another person want to enter again. No? Okay. Impact on financial stability because of workforce shortage, you have to pay salary more, and therefore, it will cause a pass to you. And also, very important, I met a new graduate for the medical hospital for medical university. He was working under training, okay, internship. He say he has to work sometimes more than 24 hours non-stop. Not enough doctors. That will have an impact on patient care. Okay, so it's quite dangerous. Okay, pharmaceutical price and supply chain shock. Okay, so ringgit depreciation now better already. The time when I made this one, ringgit not so strong, and the API concentration in China has led to 30% increase in generic antibiotic prices. Now, what is meant by generic? Not official. The one like, for example, Pfizer, maybe Pfizer is the official fella, okay, or Dow Chemical, official fella who make the drug, and they sell it very expensive. So then they patent it. So after the patent expire already, all the other people, small shop, using the same formula, sell it as good as the original, but very cheap price. Because the patent is over. And we call that generic. Number one, India. Okay, antibiotic prices. Oncology generates a standard inpatient stay, pretty poor resources. Okay, this one. So how do you sell? Manufacturer, average manufacturing price, wholesale acquisition cost, average sales price. Come to wholesaler sell to pharmacy. So then we average manufacturer price plus. Then come to customer. How many people touching? Here touching means they want profit. Here touching means they of course want profit, right? So you can see sometimes a pharmacy offering 50% discount. Even with 50% discount, they're still making profit. Okay. So post-COVID recovery revenue gap. Okay, COVID pandemic led to a significant revenue recovery gap for private hospital. So elective surgery backlog because of COVID. I don't know which vaccine they're taking. Some people are facing after post-COVID still facing big medical problem, no? Okay, so because of COVID, hospital charge a lot, I guess. Okay, so policy response, the introduction of GST on private added 60% to the bill, 6%. Now that is additional cost for us. Okay, providers are absorbing part of the cost. They say only to retain volume, but basically they don't. Okay, they say they do what they do. Okay. Then subsidizing political sensitivity. Okay, implementation of subsidy rationalization measure, which Which citizen agree on that? Okay. Rationalization, no way. Without new revenue resources, because the people don't want to pay, so the public sector faces a 2% real budget cut. Okay, not enough money, achievement of the health target or whatever it is. Okay. So anyway, for both private and private hospital, you need to have good balancing. If not, this will be problem. Digital investment, productivity promise, hopefully electronic medical record, telehealth. Telehealth not that popular in Malaysia. Certain countries very popular. Australia. Okay, Australia is very popular in telehealth. Can reduce cost. Okay, 8% and so forth. Okay, hopefully can done. Mitigation, reform pathway, integrated care network, value-based policy. Oh, that was nothing much. So from this chapter, we see the financial environment in Malaysia. Basically, Malaysia is not that expensive. Okay, compared with other country. Public hospital is very good. Unfortunately, long wait time. Private hospital is okay, also very good, but very expensive. And the government has put in a lot of conditions. Okay, for the pricing increase. Okay, for pricing increase. Okay, I think I finished 2 chapters, right? What I want you to do in the week that is coming, I want you to read by yourself chapter 3, 4, 5, and 6. Please read 4 chapters. And in the next class, I will not go through slide by slide with you. Chapter 1 and chapter 2, I go through slides with you because it is something new for you, right? And also to set the background, the stage for you to understand more. That's why I want to do line by line chapter 1 and 2. Now come to chapter 3, 4, 5, and 6. These 4 chapters, I want you to read. And the next time we meet, we are not going through line by line. I'm going to call up the chapter and I'll show 1 or 2 lines, and I want to hear your comments. Okay. This class hopefully is not one way. I talk, you listen. In subsequent classes, you should also talk and I should listen. Okay. So please read by yourself. I know it's tough. You're working, right? You're working. So just read the PowerPoints, because every chapter is only about 20 or 30 slides. Okay. 20 or 30 slides. So it's not that tough. So one day you read 1 chapter. So by the next week, you will be able to read 4 chapters, and then we like to discuss. Okay. Now, is there any question before I stop recording? Make some noise.
No, sir. No, sir.
Okay.
No, sir.
Please wait. Okay, please wait.
Mr.
Don't
Chair,
leave. Yes.
Mr. Chair,